This conference will now be recorded.
Well, now it's official, I guess. We'll give just another minute here for get a few more people jumping in and get started momentarily.
Sounds good. Sounds good, sir. So, well, hopefully we have a nice crowd. And like I said, most of these are well received on online. Folks will come in after the fact if they had something else or had a different lunch appointment or had to work or whatnot. So we're always appreciative for those who take it online or take it live. And folks have any questions, they can fire away. And we've got our subject matter expert in.
This is Dean Erdahl, and just kind of checking in here. I can't stay too long today, but wanted to meet up with some Renville County people.
Excellent. Thanks for joining us. Appreciate it.
Yeah, good to see you, Dean. Thanks for being on.
Yeah, thank you.
Roads a little slick in the Twin Cities this morning too?
The roads weren't that bad, but the sidewalk in front of my hotel was, and there's a gradual decline on the sidewalk, which was glare ice, and
Really?
I was leading my dog, and I started sliding down the sidewalk slowly toward the river.
Ooh,
I had to grab onto a light post to gain my footing again.
yikes.
Wow.
Well, maybe take off the dress shoes and put on an old pair of tennis shoes. Something with a little meat on.
Well, I was walking my dog this morning, and I didn't have
Oh,
real good shoes on. And,
gotcha.
uh, I did the next time I came out.
Awesome. Well, if everybody's cool, maybe we'll get the ball rolling. We'll start with a little introduction. And I want to welcome everybody to our Renville County HRA EDA Lunch and Learn. We do this every month as a standing meeting over the noon hour on the second Wednesday of the month. And each month we have a different topic and a different presenter, something germane to business and to economic development, whether it's starting a business or growing your existing business, or you come to the point where it's time to transition the business off to a different person. Different topics all related to business. So today's topic is what to know when you are applying for a loan, whether you're applying to your local bank or credit union or to an economic development organization like the Renville County HRA EDA. There's a lot of commonalities and things to look at. And I guess this topic kind of came up several years ago. I had somebody come in, was looking at applying for a loan, a business loan to basically get pre-approved, and they were kind of under the assumption that this is like when you buy a house, that you come in with your pay stubs and your personal financial statements and copies of your and retirement account and that kind of stuff, and you're pre-approved for 250,000 or whatever that number is. And when it comes to business, it's just a little bit different. Every situation's different, whether you're wanting to buy, if you're looking at buying a business, it could be an insurance agency, it could be a cafe, it could be a gas station, and everything just kind of is very different by industry. So we're going to talk, or our guest speaker today is going to talk a little bit about kind of some generalities, things you need to know, how to prepare for a bank loan, and once you walk into the banker's office, what to expect. So with that, we're going to turn it over to Eric Peterson. Eric is, many of you know, a local gentleman from the Bold, I believe you're a Bold graduate, Eric?
You got it. Class of 98.
Excellent. Oh, you're just a youngster, Eric. And
Yeah,
Eric
maybe.
also, besides his day job, Eric is also a farmer in the Renville County area. And his day job is he is president of FM Bank in Olivia. So with that, we'll turn it over to you, Mr. Peterson. Thank you.
Great. Thanks. Thanks for the intro, Jordan. Thanks for having me here today. Always love chatting about lending and finance, business ideas along. Um, yeah, I mean, as Jordan alluded to, I'm gonna use the term lender here. A lot of times I may say bank as well, but really a lender could be a community organization, um, could be a friend of yours. You never know. But when I use the term lender here, we're just talking kind of generically about anybody who's going to borrow money to somebody else. These are kind of some things that they're looking for. So a little bit on me. Jordan mentioned I'm president at FM Bank here in Olivia. We've got locations in Granite Falls, Clarkfield, location that we're hoping to add down in Waseca over the next year. And so we specialize in ag and commercial lending for the most part. We obviously do retail lending as well, but those are kind of our specialties. Your eyes maybe jumped right down to my fun facts there. I was an engineer for 12 years, not the train type, unfortunately. Didn't get to pull the whistle. I also tap danced for 12 years. Those things, that's just purely coincidental. Those weren't at the same time. Lee Doomer School of Dance, Bird Island, Minnesota, for 12 years. Also grew up in several family businesses. My mom owned a clothing store for many years in Bird Island, and spent a lot of time there as a kid as well, and a little bit in the family propane business as well. So always been around small business and farming. Have a real passion for it, and helping people make those transitions or get into that world. So enough about me. Let's talk a little bit about just a quick agenda or outline here. I'm going to babble for about, let's call it 20 minutes. There's plenty of time for Q&A, of a lending overview of, and then talk about a few key factors: credit history, cash flow, collateral, character, the C's. Sometimes there's 3, sometimes there's 6, sometimes there's 7. I'm just going to cover 4 of kind of the main ones, and then again, plenty of time for Q&A. Always love this Bob Hope quote when we're talking about underwriting or how to qualify for a loan. A bank is a place that will lend you money if you can prove that you don't need it. Pretty much, a little tongue in cheek there. That's not always the case, but obviously there are certain standards that anybody who's going to borrow out money of, are we going to go along with this or not? And that's why I want to give you just a little bit of an overview here to try to help along and try to help take away that perception that you got to have the money in order to get the loan. So that's what we'll go over. So Stephanie, if you want to go ahead to the next one, we'll get into it here. So really the only thing I wanted to talk about on just a real broad lending overview is this. So you can fill in the blanks here. Think for just a second on this. Banks or lenders provide something and they want something back. Well, that's something, obviously. A lot of times people think that we're taking collateral or we're taking other things, and with a hope that something maybe goes wrong and we end up with that. Absolutely not the case. We're in the business of providing money, and we want that money back with interest. In the case of maybe some other organizations, some gap financing, things like that, I would say it's a similar situation, maybe just with some different terms on it. But at the end of the day, we're providing money and we want money back. We don't want stuff back in return. So if you understand that, I guess that's the background for all of that happens on every situation we're involved with. That money goes out and money comes back in. We don't want to get stuff back in. We don't want to have nothing, being that we gave money out. So that's, I guess, the key thing, that a real simple concept that sometimes gets forgotten and everything else revolves around. So with that, let's jump on to the next one. One of the key factors in how we're making that decision of, is that money going to go out and hopefully we get it back in, is credit history. So I believe everybody would be familiar with a CBR, a credit, familiar with their credit score. But behind that score, there's a whole report that details your credit history, on-time payments, what you have for credit extended, if there's been collections. And so all of that goes into these credit scores. there is not just one score. There's many bureaus out there. There's three main credit bureaus that most lenders use. They all have a little different way of measuring that score. So oftentimes we'll have customers come in and say, "Oh yeah, I'm a 760 credit score," and then we tell them, "Well, you're 5, depending on which bureau we look at." And in different situations, we use different bureaus for different situations. Sometimes we use all three, but scores can range anywhere from 320 to 840. Most people are in the 700s. If you start getting below, let's say 650, 640, that could be challenging to get approved for funding, because what that means is that really to get down to that level, there has to be a bit of a history of not making payments on time, maybe some delinquencies. If you start getting below 600 on the record there, so the CBR matters. Timely payments are a big factor in that, and of course we can make some exceptions as well. For example, oftentimes we may have somebody that doesn't have a score. If you don't have a credit history, in those situations we kind of have to make judgment, and we have some protocols in place. Most places do, to say, well, what's the reason why they don't have a score, and then can we move on without that? So there's different situations that we can factor that in, and an annual credit report that's available for free to anybody. Once a year, you can pull your credit report for free by going to www.annualcreditreport.com and pull that information. So with that, that's kind of one of the first, I guess, key aspects we look at is that credit history, and trying to see, well, does this individual, or in some business cases, group of individuals, have kind of the right past performance that could set things up well for financing this. Go ahead, Stephanie, to the next one. Unless, of course, there's any, I don't see any sort of questions popping up yet. By all means, interrupt if there are, and we can take those along the way, or catch them at the end too. Like I said, plenty of time at the end for questions as well. So the next one, I'll chat a bit about cash flow, or the ability to repay. Essentially, we're looking at, okay, a certain amount of money is being requested, and as I mentioned before, we give out money, we want to get money back, and so we have to be able to prove that that's the case. Inflows, what are all the sources of income, less what the expenses are. And again, this could be for a person as an individual, or for a business, or, as in most cases with business, we're actually looking at both. What we in a lot of banks would call a global view of how do we combine somebody's individual personal situation along with the business, and make sure that the overall picture looks like it's going to work together. We can't have we can't have a business being completely subsidized by an individual, and then they don't have means to keep living or make their house payment, for example. So we need to, most of the time, banks or lenders are going to look at both of those situations and roll them together to say, well, on a personal level, can this person support any sort of debt and expenses they have? But then at the business level, can that happen as well? And we will factor in whatever the payments look like. So oftentimes at this point, we're looking for tax returns. We're looking for a budget that might be a personal budget and a business budget. Where do you expect this business is going to go? What are we looking at for income and for expenses? If you're starting a new business, or even buying into an existing one, there's good resources to help analyze that. Sometimes people can feel like that's an overwhelming task. Like, hey, I want to get into this business. I think I could do well at it. I just don't understand how to look at that and how to analyze it. A bank can help, EDA organizations can help, Small Business Development Center, Southwest Initiative Foundation. There's a lot of organizations out there that can help with that. So, and again, this is something that we have to prove. We actually need paperwork showing how we got to that. We can't just say, well, we know this person, they're good for it, we're just going to trust them on it. Because then in turn, in our situation at the bank or at any bank, the FDIC comes to us and says, well, what proof do you have of that? Because we get audited on our files as well. So we have to have the right documentation in place to support that decision that's being made. The other thing banks can help with, there's some common ratios that we can help look at, and certain category might be a little bit higher than what we see in other similar businesses or other similar situations. On a personal side, a debt to income ratio that's over 40% is probably getting a little too tight. There's just things that kind of industry standards. They're not hard and fast rules. There's just some guidelines on where some of those numbers might come in at. And again, we can help with some of that too. So yeah, think of your cash flow as the ins and outs of how money's moving, and we want to make sure that any sort of new debt isn't going to take that bathtub, and it may drain the bathtub a little quicker, but the hope is we're adding another faucet to that bathtub, which is adding more income, and then that helps keep the bathtub at the same level or hopefully even increase it over time. And that's what we're looking at, and we can help analyze some of that as well. So that's cash flow. Stephanie, go ahead to the next one, which is collateral. I think most people are familiar with this, but just a few key points. Obviously, collateral, our assets, are just stuff that's pledged to secure the loan. It can be seized if the loan obligations are not fulfilled, which nobody ever goes into a situation expecting that. Really, the lender looks at it as a bit of a safety blanket or a backup plan of what happens if I don't get my money back. Then what are we going to look at? That's all probably pretty obvious. What sometimes isn't realized is that collateral doesn't have a dollar for dollar value with cash funding. So there's an advance rate that's used to look at collateral value of something might be $100,000. Depending on what that something is, we might only be able to loan a fraction of it. At the higher end of advance rates, you have things like real estate. You may, when you're buying % down on it. Let's say you're buying a business, to go to the other extreme here of a really low advance rate. You're buying a business and there's a bunch of food inventory, perishable items. It's not something that you're going to get a lot of money for in most situations because it's a perishable item. It's not something that's going to last real long if it has to be liquidated. So the value you can get out of collateral is all going to depend on what type of collateral it is and the situation associated with that collateral. So that's another C again, that or not. And then the last one I wanted to talk about today, Stephanie, you go to the next slide, is going to be character of the borrower. I think every lender, anybody who's made a decision, whether you're a lender or not, even if you've borrowed a friend money, part of that decision is what's the character of this person that I'm giving the money to? Are they really going to stand behind it and make sure that something, that I get my money back? And so, here there's a whole spectrum out there of character. To the far right in the green there, we clearly have Jordan, who's stand-up member of the community. He's going to be he's going to work with people. He's going to understand his numbers. He's going to know his finances. Somebody who's just generally good to work with. And then let's say on the left there, an example that doesn't work so well might be me. Let's just say I'm somebody terrible to work with, and maybe I don't pay my bills on time. I got a got a bad credit score, we would see that. But maybe even more so if I get, sometimes if people get backed into a corner, they're not, blame a lot of other people in that situation. These are all things associated with character that we have to factor into it as well. Lenders might be using, in some cases, background checks or references to help assess this, because it's not always something that an individual can judge on themselves or on anybody else very easily without some sort of other third party reference to help figure it out. Of course, there's consent needed to do any of those sort of checks, but there are getting to be more cases where that's being asked. And then into risk ratings, which most lenders have, to say, well, how much risk might we be taking on with this credit, which can also have an impact on the cost of the loan. A lot of people don't realize that interest rates are typically based on risk, and if the bank is taking on more risk, or any lender, but especially with banks, they are probably going to price that loan a little bit higher to try to cover the potential higher risk. And that risk could come from any facet. You could have somebody who's great on character, but maybe has a poor credit score, collateral. All those things go together to try to assess the risk associated with, I'm giving money out, am I going to get that money back? Which will then in turn price the interest rate. So that's a few key things on character. Those were just kind of an overview of things. Stephanie, you can go to the last slide here. So we look at, I'm just kind of hitting the tip of the iceberg here on things that we look at when making a credit decision. Obviously, it takes a lot of information. Some places will have an application statements, balance sheets, a lot of different stuff to try to help make that decision. Again, sometimes it's readily available, sometimes it's not. But keep an eye on, as an individual, your credit score. Of course, understand if you're filling or draining the bathtub and to what extent. Again, a lender should be able to help with that a bit, or small business development center or somebody like that. And just know that your reputation can precede you. So character can work for you or against you in these situations as well, because it all gets factored into that lending decision. SBDC, Southwest Initiative, that's just to name a few. I know there's more out there that can help in a situation where somebody's wanting to get into a business or to transition one, to buy one, whatever it may be, a startup. They're all a little bit different, but there's resources out there to help get that going. So with that, that's what I was covering today. Jordan, I'll leave it up to you and Stephanie, if you guys want to, if you have any questions yet, or you want to open it up for questions, see what's out there, or by all means, Jordan, I know you obviously do plenty of this.
Yeah, any questions for Eric? Awesome presentation. Eric, okay, so let's, if you don't mind, I'll ask the first question. So say I'm looking at putting together, looking at buying an existing cafe, and it's in operation. I'm assuming you're going to want to see, have the from the seller some historical financials from the last couple of years along those lines. Things putting together, what kind of typically it would be common, once you've got a good comfort level, a loan to value ratio of the project. If I'm buying this business for, let's just say easy math, $100,000, what would kind of be, I suppose, the top level, as much financing as a bank or credit union generally provide?
Yeah, so you cut out just a bit there, but two pieces to that, I would say. First, we're gonna need to gather the right financial information about the individual looking to buy it, as well as whatever we can get on the existing business, and then that may need to be tweaked a little bit. One thing I'm not going to say often, but once in a while we see, especially in cash heavy businesses, of that business to repay, which is a little bit can be a little bit tricky. And you know, it is what it is sometimes, and sometimes we can do something with it, sometimes we can't. It all depends on the situation. I'm sure others have run into this too. So if it's a cash heavy business, sometimes that can be a little bit just a little bit tricky to get the full picture of what's going on. But we can do the best we can with it. In terms of what a bank might do on that, a lot of it will come down to, you know, what's available there for assets as well, back to the collateral side of it. And dollar example you gave, we'd want to see a balance sheet to know, you know, what are the assets there, and what kind of a value or what kind of an advance rate can we put on each one of them. And there's, you know, there's a chance that then that may end up coming up short in a cafe situation, depending on if the building is owned or not and things like that. And if it does, that's where then we'd reach out to, you know, a Renville County EDA, Mid Minnesota Development, folks like that who can help step in and, um, you know, add some gap financing to that to help cover the gap of collateral. So that's, I guess that's my 2 cents on it. Again, you see a lot of it. There could be others on the call too that do as well. So any other thoughts on that?
Other thoughts or questions related to that? I don't want to monopolize all the questions and all of Eric's time. And I'll ask another question. So in the last year or so, if you've been watching the news, interest rates have been creeping up's not the right word, jumping up is maybe the right word. What does that look like in regards to financing a loan right now, Eric? You know, interest rates have been low for so many years. You know what, probably prime was what, 3.5, somewhere in that ballpark for several years. Now we're up over 7. When it comes to financing, you know, people just like a mortgage on a house, little concerned about getting locked into high interest rates for a long term. Is there some tools, you know, adjustments, or what are you seeing? What's working for you guys over there, Eric?
Yeah, absolutely. No, that's a great question as well. And so this is, if you just to touch on the every run up in interest rates that they've had in the last 100 years, this is the fastest, steepest incline we've seen of interest rate increases. And so, you know, it's a bit of a shock to the system. Um, and so, you know, Jordan, to your point and where you're going with some of this, we're certainly seeing a lot more shorter term rates. You know, people aren't as interested in buying 25 or 30-year money. They're wanting to buy as short of money as possible and make sure there's no sort of prepayment penalties, such that, you know, we'll likely see lower interest rates again down the road. We just want to make sure people are positioned to take advantage of those low rates without a lot of cost. So, you know, I think the playbook right now for most bankers is we're trying to go shorter rates, make sure there's no prepayment penalties on anything, and you know, basically, as they say, try to date the rate, don't marry it. Marry the project, date the rate, and then we can refinance that rate later on into something better. You know, we still have to make sure that we can qualify with the current rate, though, because the reality. But for the long term, we just want to make sure that we can try to get something refinanced when that time comes.
Excellent, thank you. Again, not wanting to dominate the conversation, but are there other questions, or if you're not comfortable asking, you know, feel free to put it in the chat box and one of us can ask it for you. I guess another thing is fees. So is there an application fee typically to apply for a loan at a bank, or when do those kind of fees and those kind of expenses start incurring as you're, you know, and I
Yeah.
guess it's a two-part question. The second part here is, when's the right time to talk to a banker? if somebody comes into my office at the EDA and we start working on a project, we help them, like you said, with the Small Business Development Center or some other organization, help putting together business plans, financial projections. Is it a sooner rather than later, or do you want to see a fully cooked project on paper ready to go, or what works best for you, Eric? I guess that's a two-parter.
Yeah. So, I mean, I think in terms of timing, a lot of times, I guess sometimes that's going to be personal preference already. Me personally, I generally like hearing about it early and often. I guess if there is a project coming up, it's good to hear about it right up front, and then to help guide that a little bit and offer advice on, well, here's some things to think about, here's some things to consider. At the same time, it's a bit of a double-edged sword, because if we don't really have any numbers to work off of, there's not a whole lot we can really dig into at that point. Sometimes people will come in and they'll kind of want a commitment right away on it. To your earlier point, it in the business world, it really doesn't work that way. And so, unless somebody really has their ducks in a row, we kind of need all those finances, all that financial information to do anything. But that's not to say, hey, don't feel like you got to have everything put together to get going, because we're there to help figure that out, help put that information together, help guide on, so you don't spend a whole bunch of time on something that really isn't needed or maybe isn't all that important. Just don't expect a decision right away up front, because we're going to need the numbers and the analysis to help. As far as
So it's
fees
good.
go, well, go ahead.
Sorry, I was just going to say, so it's a good idea, to stop in, chat with your banker, have a cup of coffee, and just say, here's what I'm thinking of doing. I own a cafe. I'm thinking I want to add a coffee bar to it, and I'm looking for, going to be needing to buy equipment. Kind of the prime the pump and keep them posted kind of thing, Eric?
Absolutely. Yep. And, again, bankers, developers, everybody sees a lot of different projects. We all know that those are confidential, and so they stay that way. But oftentimes bankers can, maybe be looking at something like this, or have you considered this scenario, or things like that, that can help with the thought process and help with the development of the project or of the plan. Not hearing anything from Jordan right now, but one more thing I would add, just to go back to the part one of the last question too. He's talking about fees, application fees, things like that. There's usually nothing. Banks aren't going to have much of an application fee for a commercial business. The EDA organizations may have a $50 fee or something like that if it gets to that point, but again, all of that should be very minimal. The idea being, especially on the commercial side of things, we want to keep things going. Help out our communities with whatever we can for financing support and advice.
Excellent. Sorry, I dropped out there a second ago. Any other questions? Again, I do not want to be monopolizing this, but you know me, I'm curious, George. I've got a lot of questions. So, others? All right. With that, I think we're going to call it a day. Thank you so much, Eric. I greatly appreciate it. And Eric, again, is president of FM Bank in Olivia. And if anybody's got any additional questions, they can give you a call, Eric, or zip you an email, and you're happy to chat with them, I'm assuming?
Absolutely, by all means.
Thank you so much. And thanks to all of you for joining our Renville County HRA EDA Lunch and Learn. We do this once a month on the second Wednesday of the month, a standing meeting over the noon hour in an online format. Every month, a different speaker, a different topic. And we thank you all for coming. And this event was recorded and will be posted on our website probably later this week and early next. So thanks, everybody. Have a great day. Thanks, Eric.
Thank you.
Thank you, Jordan. Hi, Eric.
Awesome job, Mr. Peterson.
Thank you. Thanks for the opportunity.
Thank you, sir. Bye-bye.